Welcome to the Startup Funding Espresso. I'm Hall T. Martin, where we talk about how to raise funding and invest in startups and the time it takes to drink an espresso. If you have a question about startup funding or investing, please go to the website, startupfundingespresso.com, and type in your question into the chat bot in the lower right corner to receive an answer. I hope you enjoy this episode. Hello, this is Hall T. Martin with the Startup Funding Espresso, your daily shot at startup funding and investing. In startup funding, there is venture capital and venture debt. Venture capital takes an equity stake in the startup in return for funding. Venture debt makes a loan to the startup for that funding. Both have their place in the startup ecosystem. Venture capital comes in at the early stage of the business as the startup needs funding but has no revenue to pay it back. Venture debt comes in at the later stage of the startup because the business has revenue with which to repay the funding. Venture capital launches the business, but venture debt continues the growth. As the startup grows from the early stage to the later stage, equity becomes worth a great deal more. At the later stages, the founders calculate the value of their equity and compare that to the cost of a loan. Dilution in the form of equity funding becomes expensive to the founders. Founders turn to venture debt when the dilution from the funding costs more than a loan repayment. Consider the use of venture debt in replacement of equity funding from venture capital for your fundraise. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start us into today. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.